We've already done those. Good morning to everybody. On behalf of my partners in the firm at Bowditch, we're very happy to sponsor this roundtable. When the decision was made to focus on financial services, we stepped right into it. We sponsor the chamber in a lot of ways. Many of my partners, including myself, have been members of the board of directors, and we think it's a very important thing. And we urge everybody to find ways to get involved. It's essential for all of us who are located in and around Worcester and Central Mass. But this one was in particular of interest to me because of my practice in the financial services industry. The firm obviously represents a lot of financial institutions. My practice for 35 years has included representing people in the financial investment field. So having an opportunity to bring in speakers and talk about that was something really hit close to home. And we're very excited to continue to be able to do this. And we appreciate everybody taking time out of their day to be here. And in particular, Karen Shapiro from Provo, who's going to talk to us about sustainable investing, which I'm really looking forward to learning more about. So with that, thank you all for being here. It's a privilege for us to be involved. And hope you guys all enjoy today's program. Thank you.
Thanks so much, Lou, and we definitely appreciate all your support here at the Chamber from Bowditch and from you in particular. We appreciate also the No Karen jokes. If you know any new ones, if anyone knows any new ones, you can feel free to let us know, but I'm sure we've heard them all. And now I would like to turn it over to Jessica McGarry, who is from Country Bank, our supporting sponsor for this series for 2021. Jessica.
Hi, good morning, everybody. I'm a Vice President Commercial Lender here at Country Bank. We have a nice little synergy here with the Chamber and Bowditch are both upstairs in our building and we're downstairs. So if you're looking for any of us, we're all here on Main Street, live in the dream downtown. Looking forward to starting to welcome some people back and seeing some familiar faces. So we're excited to be a part of this. Two things that I wanted to just quickly mention that the bank has been doing in support. Number one, we are a proud sponsor of the Worcester Regional Chamber's Scholarship Fund. And so what that does, we have committed to providing scholarships for local businesses that would like to be involved in part of the chamber. But because of financial considerations relative to COVID, maybe you're having a hard time with that. I'm happy to say that we have awarded 10 scholarships so far to area businesses. Many of them, you can see them on our LinkedIn page. They're familiar faces and we're just so happy to be able to provide that support because we know how much benefit we get from the chamber and we know that other businesses are going to be able to do the same. Secondarily, you are a proud sponsor of the Worcester Red Sox. Very much looking forward to opening day on May 11th. And again, hoping to see some of our friends and colleagues there at opening day and looking forward to all the great things that we have coming up. So very much looking forward to Karen's presentation today. Want to thank the chamber, the staff and Karen for doing this great presentation. I think it's very timely and I think we'll all benefit from it. So thank you very much.
Great. And thank you so much, Jessica, for your support of the Chamber Scholarship. That has been like a really fun program to be involved in because, so much of the calls that we're taking right now at the Chamber are people at their worst and most desperate, and they're having a really difficult, year like the rest of us. And so it's been really great to be able to hand out good news and and hand out those scholarships that are so helpful to these members. So I appreciate that so much. So Jessica also made a great point that Lou, myself, and Jessica are all in the same building. So I have made Karen Shapiro a co-host in case 311 Main Street internet goes out. The Zoom will stay open and we'll all still be here. So no worries, but we're happy to welcome you from 311 and I'm going to stop sharing my screen. I wanted to make you aware, I forgot to say earlier that we are recording this and I will share it with all of our registered attendees at the end. Karen Shapiro has also offered to share her slides, so I will be able to give you those as well. So without further ado, I'm here to welcome Karen Shapiro, and Karen is the Director of Sustainable Investing and Financial Advisor with Provo Wealth Management Group. And thank you, Karen, so much for being here. For questions, you can feel free to write those in the chat, or when Karen is done presenting, we can unmute and ask them, or you could write them in the chat. Thank you so much, Karen.
Well, thank you so much. Is everybody seeing my screen?
No.
Okay. Okay, which now?
No.
Oh gosh. Okay, let's try this again. Of course, you know, we
did
ran
try it. We
this.
know it works.
Yeah, exactly. We know it works. So Zoom.
It's
Okay.
happening. There it is.
It is.
Yeah, if you want to say start the slideshow, because right now we're seeing your notes and.
That's what I was wondering is, yeah, being in the financial services field means that you have to script everything, but that doesn't mean I have to stay with it. So, and in fact, okay.
I can go ahead and share. Oh, there you go. It's working.
There. Da, 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 da.
You're good.
Okay.
All right. Now I'd like to.
This is
Shapiro.
like being, back in graduate school or something.
Yeah.
Did I pass the test? So I just want to say that it is a very timely topic because I'm not sure if you can see this or not. It is the current issue of investment news. And the title says, "From Fringe to Fashionable, ESG is ready for its close-up." Now, I'm not sure I've ever been called fashionable, but anyway, I'm so delighted today to speak to you about an area that I am so passionate about, which is sustainable investing. So just briefly background, Provo Wealth Management, who we are. We provide investment advisory and wealth management services. We started over 25 years ago. We've been awarded the Best of Business Award from the Worcester Business Journal since the award was since inception of the award. So my discussion today, I want to just frame it from the fact of my background. I am an environmental scientist, worked for a number of years doing research and consulting work in the field. Then I transitioned. I joined a sustainable investing mutual fund company in New York, where I was for 7 years, and then decided to become a financial advisor. So that's just sort of a little bit of background. But before we go any further, I'm curious as to what you're all hoping to learn from today's presentation, because I want to make sure that I'm tailoring my comments to to be in line with what you're hoping to get. So if somebody wants to pipe up, unmute yourself, I'd appreciate that. Anyone?
Let's see. Hi, from one of the other Karens here today.
Yes.
I guess my question for today is, what makes investing sustainable?
Okay.
What falls under that category? I mean, I want to do the right thing, but how?
Okay, great.
Hmm.
Anyone else? You don't have to be a Karen to speak up.
I'll break the cycle. This is Jeff Pernier. I've been incorporating ESG and sustainable investing for the last 2.5 years in my practice as well. And just curious to see how others are bringing up that conversation with clients and how they're receptive to it. It seems like it can be a unintentionally politically charged conversation, and so are others running into that same predicament as well?
Okay. Anyone else?
Karen, just a thought, because I spent a good chunk of my life dealing with customer complaints and representing advisors and firms. Will you be speaking at all about the balance between duties to clients and suitability and proper investment strategies in terms of maximizing their financial position, and what the balancing it out against focusing on the areas of investment and sustainability that you're passionate about? That's all.
Yep. Okay, great. So so far everything is something I was planning to address, so I appreciate that. So without further ado, I'm going to get started. So what is sustainable investing? As you can see in this word bubble here, there are so many different words that have been used over time to describe an approach that considers non-financial impacts in investing. The definition that has become more in use today is what's up here on this slide, that it's an investment discipline that considers environmental, social, and corporate governance, so that's where the ESG comes from, criteria to generate both long-term competitive financial returns and also positive societal impact. And this approach is applicable to all types of assets, and I'm going to walk through that a bit today. So it includes stocks, it includes bonds, and even includes cash. And addressing the issue of growth of this field. Today, $1 in $4 is invested using a sustainable investing approach. So just a little bit of history about this idea. So early approaches used exclusionary criteria, and the roots were essentially from various religious groups. So typical exclusions were the so-called sin stocks: gambling, alcohol, tobacco, firearms, sometimes nuclear. Then as time went on, some other roots entered, mainly the South African divestment movement, the concern about funding for the Vietnam War, and then after that too, environmental roots started to take hold due to 3 Mile Island, the Exxon Valdez oil spill. So it's changed a lot over time. And one of the big changes is that it's no longer just a what aren't you going to invest in, but it's also what are you going to invest in. This is a graphic courtesy of the US SIF, which is the closest thing that this area has to a trade association. And if you want to learn more about ESG, sustainable investing, I highly suggest that you go and you look at their website. It's ussif.org. So here we see what are some of the environmental concerns, such as climate change, global warming, sustainable and use of resources, green energy. Under social, we have issues like workplace health and safety, labor relations, workplace benefits. And then under corporate governance, that includes issues such as whether or not there's independent members of the board of directors, whether there's a diversity across the board of directors, how executive compensation is calculated, and an area that's become more interesting today is the corporate political contributions. So essentially, what are companies and who are companies backing, and are they reporting on it? So to get an idea of how sustainable investing lens might be applied to a specific company, let's pick on Amazon today, since it has been in the news as of recent. So what are the environmental issues related that are of importance to Amazon? Well, I think we all see their delivery vehicles in the neighborhood every day. I clearly know that my children are contributing to that. And there's, of course, then the emissions of all of those vehicles, the airplanes that are needed to get us our packages either overnight or next day. Use of packaging. I'm sure a lot of you have received packages that, you know, it's one small thing and it's in this big box with all this bubble wrap or other packaging material that is not recyclable. And Amazon also runs a lot of data centers. So those are energy hubs. So how much energy is Amazon using? Some of the social issues that we've heard of recently for Amazon are whether or not employees are free to associate with unions. How is Amazon addressing racism and diversity in its workforce? And then for the G, or governance, questions that would get asked there is, what's the composition of the company's board? What percentage of the board are women, people of color? Percentage of board members who are independent and, you know, don't work for Amazon. And then, of course, there's the issue of, I'm sorry, there's the issue of how the company might be investing in political spheres. So the main way in which sustainable investors look at companies is through that ESG lens. But there's a lot of other things that go into being a sustainable investor. And I'm going to now discuss an area called shareholder activism, which is not necessarily something that you all encounter on a day in, day out basis, but it's very important. So in the case of stocks, when you own stock of a company, you're given certain shareholder rights, which includes proxy voting, the ability to ask to speak with the company, and then shareholder resolutions when you don't get the attention of the company and have to proceed to that next step. So I'd like to briefly walk through each one of these. So this is an example of the proxy voting statement for Abbott Technologies for this year. As you can see, there's a whole bunch of directors that you're being asked to vote for. Then there's various proposals that the board has put forth, there's down here the shareholder proposals. These are some years there's none in a specific company, other years there's so many of them. I think the most I've seen I can recall is 8 shareholder proposals before a company. So if you're an individual stockholder, you have the ability to vote on these issues. If it's a mutual funds will vote on behalf of their shareholders, and mutual funds are required to report how they vote on each item. So the corporate proxy statements, here you see, let you vote on things as more mundane as board of directors, and that is then what you're going to always see on the proxy. The shareholder proposals, again, sometimes you'll see them, sometimes you won't. Depends upon whether or not there's been anything brought before the company. But what's important to note is that if you do not submit a proxy either online or by phone or in person, then automatically your shares are voted as recommended by board of directors. So what this means is if I didn't submit this proxy, then I would end up by default voting for all of the questions above this gray bar and against all of the proposals below the bar. The ones above the gray bar are considered binding. The ones that are below the gray bar, the shareholder proposals, those are considered to be non-binding. So what does that mean? It means that it's being given as a suggestion to a company. They may or may not choose to take up that suggestion. However, if there's a high vote count, they're going to be more likely to vote or to take action on the proposal, because by and large companies do care about their reputation and how they look to the public. The other way that we have an impact is through investor coalitions, and institutional investors can use their economic clout to communicate directly with corporations about environmental, social, and governance issues, such as writing letters, face-to-face meetings, well, used to be face-to-face, with management. And company dialogues provide an opportunity for shareholders to voice their concerns in a non-confrontational environment. However, if the company ignores a shareholder request to meet and discuss an issue of concern, then shareholders may end up filing a shareholder resolution. And you can think of this shareholder resolution as being the holding out the carrot and stick, saying, well, okay, we're prepared to go ahead doing a shareholder proposal, but maybe this now gets your attention and you're going to be willing to speak with us. And that really is the goal of shareholder resolutions, because, as we know, non-confrontational communication is ultimately what gets the job done. However, speaking from my own experiences of having done this type of shareholder advocacy, sometimes you can write letters till you're blue in the face, get no response. And then once you file that shareholder resolution, it's like, I'm in shock. I didn't know you were concerned, about this issue. So, that's the progression of the tools that a sustainable investor might use. And that also an investor, even if they're not part of the dialogue, might be using to assess a company. So how willing is the company to listen to various stakeholders, not just its board, for example? And as I mentioned, when the carrot doesn't work, then the stick is the shareholder resolution. Now, it's not very easy to file a shareholder resolution. So, I mean, you can't file a shareholder resolution with a company because you don't like their new logo. There clearly has to be standing on which to file a shareholder resolution. And the most important part is that it can't be considered ordinary business, which we might think of is the business of business. So we can't tell companies how to run their business, but there are other things that may impact the business that shareholders will ask about. So there's, lots of SEC rules that have governed the process. They have been changing under the past few years, such as in the past, you had to own $2,000 worth of the company's stock for 1 year. They now have bumped up how long you have to hold it for. And there's been a lot of back and forth with the SEC as to what specific policies or issues can you ask about. And as I mentioned before, most shareholder resolutions are non-binding, but again, the company wants to appear as being proactive with shareholders and will likely take up something that shareholders have presented to the company. So another area where shareholders will have, where investors of any type can have an impact is through community investing. And this is where we start getting into what, the fixed income side of the market. So we're no longer talking about stocks. We're talking about bonds. We're talking about community development funds, for example. So investors can also use ESG type criteria for fixed income investing. Community investing channels, public and private investments to low income and underserved communities, in order to provide capital and training to these communities that would otherwise be lacking. And while community investing spans a wide range of initiatives, some of the areas that it helps to finance include community services such as affordable housing, healthcare, healthy food, economic development, such as job creation, infrastructure development. And in fact, this is an area that has been in the news a lot because of the proposed economic recovery, which will funnel money into development of infrastructure, which includes things like upgrading sewage treatment plants in communities, replacing outdated water services, spending money on mass transit. Then, since I know there are some banks in the audience today, just want to mention too that depository institutions like community development banks and credit unions also are a way to have impact, because these are the institutions that are using their money to invest directly in the local community. So here's an example of an investment that was made by a sustainable mutual fund company that does fixed income investing. They bought bonds that were funded by CMBS loans that were to upgrade a facility in Chicopee called McKinley House that has Section 8 assistance for seniors, which I think they defined as over either 62 or 65. So what's interesting though about this project is that it's not just about providing assistance for people, providing a rent that they can afford. They also sponsor various wellness clinics within the facility, because we know sometimes for older people it's hard to get out to clinics to take care of health concerns. So they bring in like blood pressure clinics, educational programs, and then also, fun things like monthly birthday parties, seasonal parties. So they're really making a community for people in the Chicopee area. So I know that one of the questions that was asked earlier was kind of getting at whether or not this is really a growing area. How do you bring up the idea of sustainable investing with clients? Well, one of the things that makes it a lot easier from the financial advisory point of view is that if anyone were to go look at the various fund families, you're going to find a lot more of sustainable type investments. So as we can see here, the number of sustainable open-ended mutual funds and exchange-traded funds in the US has been growing rapidly since 2005. What's interesting to note here in yellow, which is the exchange traded funds, is just like we've seen in the market that there's been great interest in ETFs. The same thing is holding for the sustainable investing area. A lot of interest in ETFs. So there's been a increasing number of fund launches, and that can be considered both good and bad, because with growth comes opportunities for greenwashing. So just like when consumers started becoming concerned about how their food was grown, where it was coming from, we started seeing various labels coming up on packaging. So it was, natural ingredients, organic. Now, some of these things are regulated as to what does it mean, but not all of these terms have. So in the case of sustainable investing, what that means is that oftentimes you just cannot go by the name of a fund. You need to understand, take a deeper dive to see what is it that the fund is actually investing in. So looking not just at the top 10 holdings of a particular mutual fund, but looking at all the holdings, looking at the prospectus to see how does the mutual fund identify areas of concern that are going to be reflected in their holdings. So for example, some mutual funds just look at a specific area. There's been a lot of interest in gender based funds. So looking at using a gender lens to ensure that the companies that are in the portfolio are employing women, are promoting women, that there's women on the board of directors, etc. But you need to look a little bit further, because what if, in addition, to gender lens, there's other issues with these companies. Are they or are they not being considered within the purview of the mutual fund and it's how it's evaluating? And then lastly, I want to address, I think, one of the biggest myths of sustainable investing. And this, I think, gets to somewhat to the question that Lou raised at the very beginning. As fiduciaries, advisors have to act in the best interest of their client. For the longest of time, the thought was that you could not invest using a sustainability lens and also have a profit. So instead it was, let's invest in, aggressively make our money and then turn around and give it to various charities. What this graph is showing is that you can both do well and do good. So in 1990, the first sustainable index was established. It's today known as the MSCI KLD 400 social index. And this was developed to track another well-known index that we hear reports every day, the S&P 500 index. The major difference between these is that the MSCI index is solely comprised of companies that meet ESG criteria. And since inception, the performance of the ESG index and S&P 500 index, as you can see, track very closely. And in fact, in some years, the sustainable index has outperformed the S&P 500. So contrary to this way of investing being a losing proposition, we can see that it's an earning proposition. And there's been a lot of digging into the question of why is it that the portfolios of sustainable investors can do better than the index like S&P 500. And what it has shown is that it's the quality of the companies that you're investing in that makes the difference. So the companies that are avoiding environmental risks, that are being better neighbors in their communities, that have better governance structures. These are all the types of things that can lead to increased profitability as reflected in this graph. So, the take home from today is that I want you to know that there's a lot of variety of flavors of sustainable investing. And it's a wonderful time to be in this area, see the rapid growth, and that you can both do good and not sacrifice performance. So with that, and then of course I have to show the required disclaimer for all of this. But I'd like to end by just, asking for questions. I tried to address what I hope we're all wanting to hear, but please, let me know what questions you have.
Thank you, Karen. So I found that really exciting to see your performance chart right there, because certainly I'm sure we're all trying to put our money where our values are, and it's nice to know that we don't have to lose our money by investing with what matters to us. So we do have one question in the chat that I'll take first, and then anyone else who wants to chime in, you can use your raise hand function and you can unmute yourself. I'll call on you. But Dr. Mitra had put something in the chat, and he was hoping that you could touch on some tax implications. I don't know if Dr. Meacher, you want to ask Karen the question?
Yeah, I mean, just speaking in general, and if there's more, something more specific you want answered, but the tax implications are, no different than, the tax implications of traditional investing approaches. There's, potentially short-term, long-term capital gains, dividends, etc.
I just wanted to kind of understand if your investment strategy is tax sensitive, specifically with the new laws that might be coming in with President Biden with respect to the long-term capital gain. Hope probably that will be increased than what we have now. Does this choice of investment address that issue, or is it sensitive to that?
Most definitely. Just like, traditionally, investments have focused on this issue by looking at what you're investing in and how often is there going to be buying and selling going on that may trigger a tax implication that, will a short-term or long-term capital gain, for example. Same thing here. You can go and tailor the portfolio to be tax sensitive.
Any thought you have about what could be the tax law changes with the new administration?
No, I will never claim to have the crystal ball. If I did, I probably would be sitting somewhere on a beach.
I knew that would be the answer, but I'm always taught ask. Doesn't
Yeah.
hurt to ask a question.
Yeah,
Thank you very much.
I appreciate that. I mean, I do recognize that, this can be a very heated area of discussion.
Yeah.
And, the question of what are the implications of the Biden administration is one of those.
Thank you for sharing your expertise. Appreciate it.
Thank you for your question. I do appreciate it.
Other questions? Jeremiah.
Sorry about that.
Hello, Jeremiah.
Good morning. Thank you, Karen, for an excellent presentation. I appreciate it. You did a great job informing me about a lot of stuff I have no clue about. My question to you is, I watch a lot of the punditry on Sunday mornings, all weekend, and I've been hearing about almost like a seismic shift with a lot of what has traditionally been very political, to your earlier point about sustainability, but starting to see a shift going towards more almost evolving into a much more understanding of, okay, we're listening to the science now. And now that we're listening to the science, there are some companies that are starting to invest a little more long-term, realizing the threat is imminent. My question to you, are you seeing that on an individual basis too? I know you had mentioned it earlier that, with Exxon Valdez and when all of that had been happening, are you seeing anything that's really almost measurable where you can, a accountable metric where you can say, wow, I am investing a lot more in this area, so.
Well, thank you so much for that question, because, I think it's a very important question to address. I think initially, probably in the 80s, if you invested using criteria such as this, you would have been called a tree hugger. I'm not quite sure, what you get called now, but I'd like to think that it's a more pragmatic approach to solving the world's crises that we are experiencing. So, for example, climate change is, I think, the largest crisis the entire world is facing. We're already seeing sea level changes occurring. We're seeing how land is being lost because of that. There's lots of maps that have been shown about what areas in various states along the coast will look like 5, 10, 20 years from now, and what will be underwater. There's famine throughout the world that has happened because of changing weather patterns associated with the climate crisis. So these are all important questions and things to consider. And you know, the bottom line is that if a company isn't investing for the future, then what is their future? And, you know, oftentimes it was always, well, you know, oil and gas, we need to have oil and gas to run our economy. And yes, you know, I think in the short term, it really is necessary. But we're seeing more and more renewable energy, for example. Yeah, I think my favorite example was a couple of years ago, the Coal Museum in Kentucky decided to switch to solar because it was less expensive. So here, if you have a museum representing the coal industry, and they think solar's cheaper, you know, what is that saying? So I hope that has answered your question, Jeremiah.
Thank you. Thank you very much.
Anyone else? And I have also, you know, provided my email on the slide. I have to say I could probably talk about this topic for hours on end, so I just kind of took a skimming of the surface in today's presentation, but I'm also, you know, happy to talk to you further if you have any other questions.
Awesome. Thank you so much, Karen. I really appreciate your overview here and your willingness to share your expertise with us. I will share your slides with everyone who registered, as well as the recording of this presentation. So really appreciate your time and everybody here for joining us, and especially our sponsors, Bowditch and Dewey, and supporting sponsor, Country Bank.
And I'd like to thank them as well. So
yeah, for sure. Thank you all. Hopefully we'll see you again really soon, either virtually or someday in person.
yay!
See you soon. All right. Have a great day, everyone.
Okay, bye.
Bye.